Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. And without further ado, let's have you jump in here, Miles, on a relatively quiet week. No record highs, no new lows. What are we looking at?
Yeah, we'll get a quick snapshot of the markets and the charts this week, because this week's pretty quiet. It is, we're coming into the beginning, soon middle of June. We had our sell in May and go away. And yeah, the markets tend to calm down this time of year. Anyway, we'll have probably a more illustrious show next week. Would that be an appropriate word? With the FOMC for the summer. And I think there is an expected interest rate hike coming next week. So we'll see how that plays in.
Yeah, it's almost a 50-50 bet right now, maybe 60-40. It was 0 to 100 that they would hike the rates again.
Right.
But now it's looking like they're going to need to based on the inflationary numbers. So you're right. Next week, we should see a lot more action. This week, what are we doing?
Well, this week, starting off in gold, we had that decline here, about a 50% decline when you go back to the March low, which is still nowhere near even your more shallow 382 fib if you're looking back at like the November low. And when we started the rise back in November. So still very, very shallow decline in gold here this spring with an expectation of that to continue maybe a little bit since we're in the summer. I still haven't given up on my low 1900 range just to get down to what would be a short-term 618 fib as well as the longer-term 382 fib. Just seeing a couple things lining up there. The 200-day moving average is still significantly below us. Now it's come up, but we're still in the low 1800s, 1820, 1830. So I do think we're just facing the normal run-of-the-mill sell in May, go away, summer doldrums. Gold is very strong in the fall. It's very strong around January to March, and that's a consistent thing that we've seen for a while.
And true fundamentals haven't changed. So you look at these opportunities as exactly that, an opportunity to add to ounces. I'm telling you, if we get below that 1920, I personally am buying again.
Right.
And I have a lot of clients that we will cost average in at that point. So let's hope that we just get that amount of volatility over the next 5 trading days.
Well, in short term, gold is at the 50% line, which we've hit 3 times now over the last couple weeks. So gold is definitely coming back in the short term and offering a lot of opportunity for people this spring who have been dollar costing in. I mean, 2085 is a pretty high price. It's not where we're going to stop.
Right.
But at least if you're looking at your gold additions in a short period of time, it's nice to get in the mid-1900s. The low 1900s obviously would be a little bit better.
So no real change either in the gold to silver ratio. Obviously, listeners know we follow the ratios, we follow the premiums. Each of those categorically have remained unchanged this week too. So silver, not a whole lot of difference, obviously. Still stuck around that 83 to 84 gold to silver ratio.
So yeah, looking at silver specifically, dating that back a little bit, you've got silver bottoming out in September and then really starting that next leg around the same time gold did in November. Silver, very strong move up from the 18s up to around 26. So the decline we've had here actually is a pretty healthy 382 fib. We did break below the 382, I would argue, here a week or so ago, actually a couple weeks ago, with a little bit of a bounce, but relatively lackluster. Now, we've got a nice channel that's built in silver and it's lining up. The bottom of the channel is lining up with that 200-day moving average. The 200-day moving average is much closer to the price of silver than it was for the price of gold. So there is a good chance maybe we see a little dip here down to the 50% retracement on silver. But, the thing that we keep talking about is eventually they're going to change places. Gold's been leading the market, silver, platinum, they've been following, and that's why silver is way too cheap compared to gold. And that has to change.
It does. And if that does happen, you're going to have the double benefit of the price pullback in a relatively still very bullish market and the ratio swing into your favor. So both of those will be strong indicators as to add to your silver ounces as well.
Yeah, so I'd still love to see silver this summer while things are quiet, maybe get down to around 22.
I would too.
Would be a great opportunity.
Sorry to those of you that have already invested, but
I'm
one of them. But yeah,
yeah, me too.
It's about accumulating ounces over time.
Hey, look, I've still got $40 silver from 2011. I could care less.
That's right.
And on the white metals, platinum is kind of following suit with silver. We had a pretty significant run up starting again, bottoming in September, really kicking off that bull market back in November. But from the bottom down around 800, 825, all the way up to 1150 was a pretty significant move in platinum. In the short term, just looking at this move since March, we're looking at 900 to that 1150, which is still a pretty significant move just in a couple months. And we've had about a almost perfect 618 retracement, and then we shot back up to the 382 fib. That 618 retracement is about where the 200-day moving average is now. It wasn't when it happened, but the 200-day moving average has come up. We shot up to the 382. Now we're sitting at about a 50% retracement level here. So I actually wouldn't be surprised if platinum doesn't really go much lower. Wouldn't surprise me if we actually see platinum start going up, or at least hold steady for a month or two until the fall comes in, and then we expect to see that to start to rise. And I know you've brought up the last couple weeks just the supply and demand aspects of platinum that are very concerning.
Yeah, and relative to palladium, the reason we haven't been pushing palladium the last few years is it got so overpriced in our opinion, not just in terms of the spot price and its historical basis, but in regards to its relative value to platinum. And that's played out. What I've been most encouraged in regards to platinum with is the price staying relatively stable despite this huge 55% pullback in palladium. And that, to me, very similar metals, very similar industrial uses in the same market, yet platinum's hanging in there, palladium's not, and call it subjective sense even. I like platinum right now.
Sure. Well, I mean, look how much ground platinum has gained against palladium already. But we showed that platinum palladium relative chart last week. We showed that ratio chart last week. And when you look at the average over the last 30 years, we're not even close.
No.
Like, even though we've had such a significant gain for our platinum owners over the last, 6 months? I mean, it's been with that decline in palladium, it's been significant, and we're nowhere even near where it's probably going to end up going when it's all said and done.
Well, the metals aren't the only flat market. All indices have been somewhat unremarkable, right? Some stocks we've had some volatility in, individual equities and what have you. Is there anything pressing that you're seeing either in the securities or in the U.S. dollar?
Well, I pulled the S&P. I know I like the Dow because it's the tugboat for the whole market, but the S&P basically is the whole market. So I kind of was curious where we're at on the S&P this week. The S&P, we've had this nice kind of climbing channel. The S&P actually hit its 618 fib here in the last few days. If you take the highs and the start of the bear market and the S&P back at the beginning of 2022, up around 47 and a quarter, and then coming all the way back down to 3,500. Which we hit right when gold decided to start going up, end of October, beginning of November last year. The S&P has retraced back up about 618, so about 2/3. We're still below the last high. If the S&P is going to show bullish, we're still a little bit below that, and that was the last sort of spike that the S&P put in back around July, August of last year. So if the S&P is going to show any type of growth whatsoever, that's the first step. Now, that doesn't guarantee it. That's not like a breakout move up, but that would be the type of step we need to see to say, hey, does the stock market have any prayer over the next couple of years? So I'm still pretty bearish on the U.S. equities market. Unfortunately, for those of you that caught our show a couple weeks ago, we had Morgan in here. We asked a couple questions. He put some numbers together on a piece that he's working on. I think it's important to look at when you're talking about the S&P. He had brought up some annualized retail sales numbers for this year in our company meeting this week. Annualized retail sales this year, U.S. is down about 2.1%, Europe's down about 2.6%, even though the COVID reopening in China has taken place. We're not seeing any boost to global economy because of that. I mean, the numbers are faltering in the three biggest markets in the world. So the odds that we're going to see continued growth in the equities market has to fizzle out at some point. And my concern is this pre-buying with the expectation of, again, continued interest rates rising, and maybe starting next week, we start to see a decline again in the equities market?
Equities will also be affected by the FOMC minutes next week, obviously, right? I mean, it's not just gold and silver that react. The dollar's going to react.
Yeah.
The bond market is going to react, but certainly the equities are going to react. What the equities are also hopeful for, they've been pricing in a pause in rate hikes. They've also been indirectly pricing in a pivot with the Fed from quantitative tightening to more of an easing. And I don't know if we're going to see that or not. If we do, and if we get any hint from those minutes next week that there's either a pause in interest rates or a willingness to grow the balance sheet of the Fed, I think that you'll see this trend in the equities continue. That's when you may go cross the barriers, right?
Right.
And so we're all just waiting and watching. Geopolitically, there's not a whole lot to talk about. So another thing that gold responds to. Anthony Blinken is going to go now here in a couple of weeks and visit China, something that was called off due to the spy balloon conspiracy theory or reality, whatever it was. But anyway, some things have calmed in the Russian-Ukrainian conflict. So you're just kind of getting this summer low. Don't go to sleep. Keep your eye on the ball. And Miles, as you started the show, really, it's almost always about the fall. What are we building for here?
Oh, that's a great question. We're building towards higher interest rates. Eventually, we're going to see a bottom in the metals market, which we may have already seen, but unfortunately, you never know. Hindsight's always 20/20. We're definitely building a channel in the U.S. dollar. You know, the U.S. dollar's really been stalled between around 101 and 106 since like November of last year. We've had a couple touches back and forth. We're on the way back up. If they raise interest rates, can the dollar break above 106 and get stronger on the international market? We just don't know. The equities market has been rebounding, but it's not actually showing growth. What we're seeing in the equities market is a rebuying of things that were probably sold off at profit over the last couple years, and it feels like short-term market investing to me. So I think we're building for that next phase. And we talk about it. It seems like we've talked about it every summer for the last couple of years, in that we get into this consolidation phase for a few months. And then all of a sudden, everything happens between November and February. And then we get into another consolidation period. And I don't know how to more emphasize the importance for all investors out there. I don't care if you're a metals investor, a real estate investor, a stock investor, a Bitcoin investor, it doesn't matter. Any investor needs to keep that little nugget of wisdom in the back of your head of, if you know what you're looking at getting into is the right decision in the long term, you need to be making that decision when nobody else is paying attention.
I love it. Such as October, September of 2022, right?
Yeah.
We were screaming from the rooftops. This is your opportunity. And those that listen are happy. They're certainly sitting in positive territory, but a lot more is developed than just price, and we're going to see what happens this summer with the potential partial rollout of some sort of central bank digital means of exchange. Does that rock the gold market? Does that rock the U.S. dollar? Does it have any effect? And what does that look like? There's a lot of different things that can move the markets. So when it's quiet and nobody's buying or people are even selling, in this type of an environment with the number of fundamentals that are building for the next number of years to much, much higher gold prices, which just means significantly more depreciation of our currency, these are your opportunities. Buy every significant dip that you can.
So that's going to do it this week for Golden Rule Radio. We look forward to speaking to you next week following the FOMC, and we'll see what interest rates do. In the meantime, if you'd like to discuss your personal portfolio, give one of the advisors here at McIlvaney Precious Metals a call. We can be reached at 800-525-9556. You can also find us on our website at McIlvaney.com. We're on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks again for listening and have a great week.